We'll begin revising which one? Cash flow statement. Before we start, the cash flow statement we classify into three activities. What are the three activities? Cash from which activity? Operating activity. Cash from operation minus tax paid will give us what? Cash from operation after taxes we get. Then we work out cash from which activity? Investing activity. It is related to purchase and sale of non-current assets. And income from non-trade investments all are included here, like interest received, dividend received, rent received, those things are included. Financing activities to do with liabilities. I mean, issue of shares, debentures, and bonds, raising the funds or redemption of funds. Interest paid, dividend paid will come under which activity? Financing activity. Then, because of the three activities, cash position changes. Net change in cash and cash equivalent. With that, add opening balance of cash, you will get which one? Closing balance of cash and cash equivalents. So these are the three activities that we work out. Cash from operating activity alone, there are two methods of working. What are the two methods of working? One is which method? Direct method, where you take all the operating receipts minus all operating payments. You will get CFO before ordinary extraordinary items. After adjusting extraordinary item, then minus tax paid will give us what? CFO after tax. For this, you have to work out all complete data. Like a cash book, you have to work out complete data. Cash sales, what is the collection from debtors, what is the trading commission earned, government subsidy that is received, then cash purchases and paid to creditors, direct expenses paid, all these things. We want collections and payments, tax paid also. That is which method? Direct method. Then what is indirect method? Going for a reverse working. What do you mean by reverse working? Take the net profit after appropriation. That is closing balance minus what? Opening balance of P&L account or reserves. Add back all appropriation, non-cash, non-operating expenses, which may be transferred to reserve or proposed dividend, depreciation, interest expenses, any amortization expenses, loss on sale of assets. Okay. If you have any non-operating income credited to P&L account, eliminate them, which may be dividend received, rent received, or which may be profit on sale of assets, eliminate them. You get CFO before adjusting the working capital. Why? Because when current assets and current liability changes, your cash position will change. For example, decrease in current asset is equal to sale of current asset. It is equivalent to what? Sale of current asset, money comes in. Increase in current asset, additional cash flow takes place. Equivalent to additional cash flow takes place. Then less increase in current asset, we buy. Decrease in current liability, we pay. So that's why we reduce. We get CFO before extraordinary item. Adjust for extraordinary item, you get which one? CFO before tax minus tax paid, you get which one? CFO after tax. So this is what we do as which method? Indirect method. Okay. We'll see or do a question based on this. Ah, which one? Interest expenses. This is provision for tax. Provision for tax. Provision for dividends, all those things. When you create a provision, no cash outflow takes place. Real cash outflow, you reduce it. Real cash outflow, you reduce it. There are certain important notes that you have to take it. Please take it up, then we'll proceed to the next question kind of. How to treat dividend. Dividend paid will come in which activity? This may be final dividend or interim dividend. It will come in financing activity as outflow. What about proposed dividend? Normally, dividend is proposed, then you conduct AGM, next year you will pay the dividend. So opening balance will be taken as paid. And what about closing balance? It is taken as current year appropriation. That is added back to profit. Take it. While calculating cash from operation, it is added back to cash from operating activity. Suppose they would have given us interim dividend paid. What will you do? It is declared and paid. It is declared and what? Paid within the financial year. That means board of directors are having the power to declare and pay what? Dividend. It is appropriated as well as what? Paid. We will add back to which one? Net profit to find cash from operating activity, and the payment will be shown in which activity? Please note this. Interest expenses that is accrued. It's a non-operating item. We'll add back to which one? Net profit to find which one? Cash from operating activity. Paid. Whatever is interest paid will be shown under which activity? Interest paid will be shown in financing activity. What about purchase of assets or issue of shares for non-cash consideration? For example, conversion of dash into equity shares. Conversion of debentures, bonds, preference shares into equity shares. Will it come in cash flow statement? No. It will be shown in the form of what? Notes to accounts. Or it will be given in the form of disclosures. Cash flow statement also we require which one? Disclosures. If you issue shares for converting debentures or bonds and equity shares, no cash comes in, no cash goes out. It will be just given as which one? Disclosures. What about for purchase of assets? Here also it will be included in which one? Disclosure. Because to that extent, shares are issued for buying the asset. Do you pay money for buying the asset? No. Are you getting cash for the issue of shares? No. No cash flow takes place. It's called as non-cash item. Those things require which one? Disclosures. Shall we? Shall we proceed? Okay. Let me ask you a specific question. From the following, identify which activity? Cash from which activity? Investment activity. Shall we start? Please take it up along with me, this particular question. That's it. They ask you to find cash from which activity? Investing activity. Nothing but purchase and sale of assets. This can be tested as a separate question or as part of a problem. What will you do? You will prepare which account? Fixed assets account at cost price. Then you will prepare which account? Accumulated depreciation account or provision for depreciation account you will prepare. To balance brought down, what is the opening balance of fixed assets? 10 lakhs. Closing balance given. What is the closing balance? 25 lakhs. Depreciation by balance brought down. Accumulated depreciation. Opening balance is 2 lakhs. Closing balance is how much? 2,80,000. Try to find out. Okay. During the year, fixed asset costing 2 lakhs, accumulated depreciation was sold for 1,10,000. If there's a doubt, pass a journal entry. Bank account data, it is sold for how much? 1,10,000. Accumulated depreciation account data, how much? 80,000. To fixed asset account, it is maintained at cost. How much? 2 lakhs. As a balancing for, you will get which one? Loss on sale of fixed asset. Balance how much? 10,000. You get loss on sale of fixed asset. That's a balancing figure. Now, how to post this in the ledger? By bank account. By bank account 1,10,000. By accumulated depreciation, how much? 80,000. By loss on sale of fixed asset, how much? 10,000. Now, this will come in accumulated depreciation to fixed asset. Accumulated depreciation on this sold asset, how much? 80,000. This is for the sale of asset. What is the entry for current year depreciation? Depreciation account data to asset or to provision for depreciation. Because are we charging the depreciation directly on the asset or are we maintaining provision for depreciation? So it will go to provision for depreciation. How much is charged the current year depreciation? 2 lakhs. By depreciation, 2 lakhs. When you tally this, 4 lakhs, there is a gap. What is the balance? 4 lakhs minus 3 lakh 60. What is the gap? 40,000, there is a gap or balance. It's given. It was decided to write off the fixed asset costing how much? 3 lakhs. What do you mean by write off? Charge it in P&L account. Profit and loss account data to which account? Machinery account. What is the cost of the machinery? 3 lakhs. This balance 40,000. This balance 40,000 is attributable to what? This depreciation written off. See, we posted opening balance, we posted current year depreciation, we posted depreciation on the asset sold, closing balance also we recorded. Still there is a balance. This is attributable to which one? Fixed asset written off. Okay, so accumulated depreciation account data, how much? 40,000. How much you write off in P&L account? 2 lakh 60,000. You write off in P&L account. I repeat, we want write off of machinery costing how much? 3 lakhs. When we prepare accumulated depreciation, we posted everything. There is a balance of how much? 40,000. This is nothing but depreciation on the machinery written off. So how much we have to charge it in P&L account? 2 lakh 60. Otherwise, what is the difference between first entry and this entry? In the first entry, we get some money. And balancing for is loss, we charge it in P&L account. Here, no money we get. We just write off the asset. Cost of the asset is 3 lakhs. Accumulated depreciation on the asset is how much? Written off is 40. Balance we write off. So how this will be appearing? By P&L account, written off. How much is written off? How much is written off? 2 lakh 60,000. by accumulated depreciation on the asset written off. On the asset written off, how much? How much? 40,000. Machinery was purchased by issuing shares. Fixed assets account data to share capital. Fixed assets account data to share capital. We issued how much? 2,50,000. 2,50,000. We tally this, you will get bank purchase of fixed asset as a balancing. Purchase of fixed asset as a balancing. Wait. In the investment activity, what will come? In the investment activity, what will come? Sale of asset. Sale of machine. How much? How much? 1,10,000 will come then. Purchase of machine or fixed asset. How much? It's an outflow. So net, how much we get? This will come in which activity? Investment activity. Wait. If it is a lengthy answer question, you can answer like this. If it is a multiple choice question, how will you answer it? Account போடாம solve பண்ணு. Okay, before that, let me to explain once again. Let me to come to the shortcut. Okay, shortcut you can solve it in 10 seconds. Okay, let us see. I repeat, bank account data, accumulated depreciation account data to fixed asset. Balancing for is what? Loss on sale. We post it by bank, by accumulated depreciation, by loss on sale. That accumulated depreciation is adjusted. Current year depreciation to accumulated depreciation we charge. Then the balancing figure 40,000 is attributable to the asset written off. P&L account data, that accumulated depreciation to machinery account, we post that also. Then we issued shares 2,50,000 to purchase assets. To purchase what? Assets. Balancing for is what? Purchased for cash. What is the amount? Sale of machine, purchase of machine. What is the amount? 16,40,000. Sir, if it is MCQ, we can solve without any journal entry, without any ledgers. How to do that? Do it in calculator. Do whatever I say in calculator. Look at this. Fixed asset paranga. What is the opening balance? What is the closing balance? 15 lakhs. What is increase in asset? Increase in asset. 10 lakh to 25 lakh. What is increase in asset? 15 lakhs. Okay. That we would have purchased. Without purchasing, how the asset will come? Without purchasing, how the asset will come? Then, apart from that, we sold assets worth how much? 2 lakhs. Then, we wrote off assets worth how much? 3 lakhs. Now, what is the opening balance asset? 10 lakh. We sold asset costing 10 lakh minus 2 lakh, 8 lakh. Then, write off machinery how much? 3 lakh. So, 10 lakh minus 2 lakh minus 3 lakh, 5 lakh opening balance. Net opening balance is how much? 5 lakh. What is the closing balance? 25 lakhs. What is increase now? How much? How much? 20 lakhs is the net. 20 lakhs is the increase. In that, how much is purchased for shares? 2,50,000 is purchased for shares. Now we have not paid cash. So 20 lakhs minus 2,50,000, how much you get? 17,50,000. 17,50,000. We sold off an asset worth 1,10,000. So that is what we got here. Purchase of machine 17,50,000. Sale of machine 1,10,000. Net cash outflow is how much? 16,40,000. I repeat once again. What was the opening balance cost? In that, how much cost you return off? Minus 2 lakhs. Minus return of 3 lakhs. So what is the total? 10 minus 5. 5 lakhs will be there. What is the closing balance in assets? 25 lakhs. What is increase in asset? 20 lakh increase in asset is there. So increase in asset 20 lakhs. In that we purchased by issuing shares 2 lakh 50. Balance 17 lakh 50 is purchased for cash and sale of machinery. It's given in the question 1 lakh 10,000. Net cash from investing activity is how much? 16 lakh 40,000. Like that you can think little extra and solve the question in shortcut. Take up this. This 40,000 is a balance income. Is it over? Live online friends, complete பண்ணிட்டீங்களா? Is it over? Now come to your handout. Come to your handout. This is January 2025 question paper. Don't expect in the மாதிரி ஒரு easy paper or easy question paper or easy cash flow statement, but still it is having its own. Please remember, we are given years in the reverse order. Second year first year second கொடுத்திருக்காங்க. Otherwise, opening balances are given next. Opening balances are given next. Closing balance is given first. Share capital, it has increased from 4 lakh to 5 lakh. P&L account 60 to 1 lakh 10,000. Debentures, it is given issued at the end of the year, which means no interest is payable. No interest is payable for the debenture. Bank loan, opening balance 2 lakhs, closing balance 2 lakh 50. We have taken loan of 50,000. This 1 lakh will come in financing activity. This 50,000 will come in financing activity. This issue of shares will come in what? Financing activity. Dividend payable, opening balance is given. Closing balance is zero. What is the meaning? They paid the dividend. It will come in which activity? Financing activity. Interest payable for the loan. Interest payable for the loan. Current year is not paid. Current year is not paid. Payable கொடுத்திருக்கானா paid. Payable, which means opening balance they would have paid. Opening, see, they say that 25,000 is which balance? Closing balance. Closing balance. 25,000 is closing balance. Okay. This 25,000 is belonging to which year? Current year means opening balance would have been paid. Opening balance of current liability would have been paid. This will be paying it. We'll be paying it in next year. Goodwill opening balance 1 lakh 50, closing balance 1 lakh 20. It is written off. Goodwill written off. Trade receivables and inventory will come in working capital changes. This trade payable, trade receivable, inventory will come in which one? Working capital changes. Okay. There are two methods of solving. One is doing it separate. Another one is doing it simultaneous. Okay. They ask you to work out which one? Cash from which activity? Operating activity. Then cash from financing activity. Two things they ask for. Okay. We can go in the same order of the problem. Share capital has increased. So it will come in which activity? Issue of shares. How much? 1 lakh. It's an inflow. Then P&L account, opening balance 60, closing balance 1 lakh 10,000. Opening balance 60, closing balance 1 lakh 10,000. Difference, we'll take it as what? Net profit for the current year. What is the net profit for the current year? Change from 60 to 1 lakh 10,000. What is the change? 50,000. Listen to it, then you can take it up. Debentures paranga. Opening balance was 0, closing balance is 1 lakh. Debentures issued. How much? 1 lakh. Bank loan. Loan taken. Additional amount is given. 50,000. All these are inflows. 50,000. Then trade payable. Okay, it will be adjusted in working capital changes. We'll do add increase in which one? Decrease in current asset and which one? Increase in current liability. Then less increase in current assets and which one? Decrease in current liability. Then trade payable பாருங்க. Decrease ஆயிருக்கா increase ஆயிருக்கா? Opening balance 75, closing balance 60. So decrease in trade payables. How much you have to minus? 15,000. Money goes out. Then dividend payable. Opening balance was 50,000. Closing balance is 0. Dividend opening balance payable would have been paid in the year. Which activity? How much? 50,000. Then interest on bank loan. Current year interest is a non-operating item. add interest on bank loan. Current year, closing balance. Current year, nothing but closing balance. We'll add back. Opening balance would have been paid. That opening balance. How much is paid? 20,000. Dividend paid also minus amount only. Then goodwill, opening balance was 1,50,000, closing balance 1,20,000. Amortization as a non-operating item, non-cash item, we'll add back. How much we amortized? 30,000 we'll add back. Then trade receivable, increase or reduced? 95,000 to 65,000. Reduce or decrease in current asset. Decrease in trade receivable. How much decreased? 30,000 decreased. Then inventory, opening balance 30, closing balance 55, increased. How much increased? How much? 25,000 increased. So if you adjust this, you will get CFO before working capital adjustment. Take it up. This is which activity? Cash from operating activity. This is cash from which activity? Done. 1 minute. 1 minute, I'll come back to this. So next, try that May 2024 model test paper. I'll give you around 10 minutes of time. I request you to try that. Try this May 2024 practice test paper. Try that particular question. First type of financing activity. That is what we had seen in the beginning. Proposed dividend. Opening balance will be taken as what? Paid in which activity? Financing activity. Closing balance will be taken to what? Profit and loss. Because it is proposed out of current year profit, non-operating item will add. Proposed the proposed the if it is recorded in the books, if it is recorded in the balance sheet, it has been already adjusted in the P&L account. In the final accounts, normal final accounts, we show it as what? Disclosure. But if it is already recorded, means dividend payable. Dividend payable already they would have. If it is recorded in P&L account, it has been already adjusted in P&L account. If it is recorded in your balance sheet, without recording in P&L account, now it will come in balance sheet. Proposed dividend opening balance, closing balance கொடுத்திருக்காங்க. அது P&L அக்கௌண்ட்ல அட்ஜஸ்ட் பண்ணாம எப்படி அது கரண்ட் லைபிலிட்டியா வரும்? Okay, they would have adjusted. If they would have adjusted, it will be shown in which one? Current liability. In that case, opening balance will be taken as paid, closing balance will be taken as what? Current year appropriation. Try which question next? May 2024 question, please try. Retained earnings are given, depreciation is given, loss on sale of asset, provision for tax, interim dividend paid is given, premium payable on redemption of preference share is given, profit on sale of investment, then additional information is given to us. Try பண்ணுங்க. What is the retained earning given to us in the question? 17,000. Any answer? Any answer for this question? $34,600. Think பண்ணுங்க. Final answer 34,600. No. 30, 40, 4600. Tax paid less பண்ணீங்களா? Tax paid. 43. How much? No. 43,600 correct answer. 43,600 correct answer. Let's see. Retained earnings எவ்வளவு கொடுத்திருக்காங்க? Retained earnings 17,000 retained earnings. அப்புறம் we'll add back. What and all you'll add back? All non-cash items. Depreciation how much? 4,000. அப்புறம் loss on sale of machine. What is the loss on sale of machine? 3,000. Then provision for tax made in the current year. What is the provision for tax made in the current year? 7,000. We'll see the tax paid later. 7,000 we made in the current year. Then what is the next one? Interim dividend paid. Interim dividend, how much has been paid? Interim dividend 10,000. That is declared or proposed and paid. Dividend paid also. There is no opening or closing balance. It is like declared and paid for the year. How much is declared and paid for the year? 8,000 declared and paid for the year. We'll add it back to CFO. Yeah, it is appropriation of profit. We'll add it back to CFO. Payment will come in which activity? Both this interim dividend paid and dividend paid will come in which activity? Financing activity. La payment la காட்டும். Why are we adding back? எதுக்கு திருப்பி add பண்றோம்? அப்படி நீங்க கொடுத்திருக்கோம் previous year. அப்படி சொல்லவே இல்லையே. நாம் proposed dividend opening and closing balance கொடுக்கலையே இந்த questionல. Whether proposed dividend Pay பண்ணலாமே. I mean, extraordinary general body meeting conduct பண்ணி they can pay இல்லையா? Interim dividend board of directors have the power to declare and pay. Final dividend also they got பேலன்ஸ் ஷீட்ல சொல்லவே இல்லையா அப்படி? எதுக்கு நீங்க ஓவர் திங்க் பண்றீங்க? இங்க ப்ரொபோஸ் டிவிடன் ஓப்பனிங் அண்ட் க்ளோசிங் பேலன்ஸ் கொடுத்துருக்கானா? அப்படி இல்லைன்னு என்ன அர்த்தம்? டிவிடன் டிக்ளேர்ட் அண்ட் paid in the current year, appropriated and paid in the current year. Only when they give you proposed dividend opening and closing balance na, opening balance will be taken as paid, closing balance will be taken as appropriation அந்த மாதிரி. Okay, இங்க டைரக்டாவே கொடுத்துட்டான் dividend paid னு சொல்லி. There is no opening or closing balance given or mentioned. Right? So add back depreciation, add back loss on sale of asset, add back provision for tax, add back interim dividend, add back dividend paid. Then what is the next one? Premium on redemption. Premium on redemption 2000. Then less profit on sale of investment. Profit on sale of investment. How much profit on sale of investment? How much? 10,000. 10,000 or 1,000? Another mistake. Less than refund of tax. Refund of tax they would have credited to P&L account. How much? 1,000. Eliminated. You will get CFO before working capital changes. Then do this. Trade receivable decrease increase so less பண்ணும். Increase in trade receivables, how much we would reduce? 2,000. Then trade payable increase you will add. Increase in trade payable, how much you will add? 8,000. Then prepaid expense. Provision for tax, we have to prepare the ledger and see. Prepaid expenses decreased. How much decreased? 1,000. We'll add back. Then decrease in outstanding expenses. How much? 400. This will give us CFO before tax paid. Now, if you prepare provision for tax account, what is the opening balance? What is the opening balance? 4,000. What is the current year provision? 7,000. What is the closing balance? Apo tax paid would have been 4,000, but we got a refund in this. This is CFO before tax. But net cash outflow, tax paid 4,000 after adjusting refund. Net how much we paid? 3,000. It is 43,600 cash from operating activity after tax. This is which question? Done. Please remember, we add back all these items because they were charged in P&L account. We add back to get which one? Cash from which activity? Operating activity. We eliminate those items because those are credited to P&L account. We eliminate them to get the cash from operating activity. This is a May 2024 question paper. So they've given, of course, opening balance first and closing balance next, like that. They ask you to find out which activity? Cash from operating activity. Cash from operating activity, they ask you to work out. Just copy. So if you have not taken up, take up this, then try the next question. You are going to try the next question. It is in the same model. Work out net profit after appropriation, add back non-operating non-cash items, eliminate non-operating non-cash incomes. You will get CFO before working capital changes. Adjust for working capital changes. You will get CFO before tax minus tax paid will give a CFO after tax. Try பண்ணுங்க. Any doubt in the May 2024 question? $84,024. Correct. Okay. Tell me how to solve it. Transfer to reserve என்ன பண்ணிருக்கோம்? We have increased from how much? 54,000 to 81,000 increase பண்ணிருக்கோம். எவ்வளவு increase பண்ணிருக்கீங்க? 27,000 we need to add back. Then um, okay, let us prepare the provision for tax account. Provision for tax account. எவ்வளவு opening balance இருக்கு? To 21 400. What is the tax paid given? Provided is given by P&L account. How much is given? 162 is given. To balance carried down 1,35,000. Ali Panna, what is the tax paid? 248 400. 248 400 work. Then current year provision for tax 1 lakh. Then what else requires adjustment? They have not given any adjustment. Yeah. Accumulated depreciation is given. No adjustment is given. So look at plant property equipment also there is no change. There is no change means there is no purchase or sale during the year. Gross nine artham cost. Opening balance cost is equal to closing balance cost now. No additional data also not available. Appo, there is no purchase or there is no sale. So difference in depreciation becomes depreciation for the current year. What is the depreciation? Accumulated depreciation, closing balance minus opening balance? 32 400 becomes current year depreciation. Since asset has not changed, no additional data also not given. So we assume that there is no purchase or sale during the year. Then difference in accumulated depreciation is current year depreciation. Then what is the next one? Investment purchased will come in which activity? That we will provide. Let us add back which one? Let us add back interest on debentures. What is opening balance? Into how much? 14 to 56. Then add interest on, sorry, interest on investments எவ்வளவு இருக்குங்க? 54,000 into 4320. Eliminate பண்ணுங்க. Then provision for doubtful debts. What is the provision for doubtful debts? அப்படி போட்டு போடலாம் இல்ல செப்பரேட்டாவும் ட்ரீட் பண்ணலாம். Provision for doubtful debts additionally created. Additionally எவ்வளவு? How much? Closing balance 54, opening balance 27. Alternatively, you can adjust with debtors also and do. Here also you can adjust. Otherwise, debtors minus provision போட்டு கூட போடலாம் நீங்க. How much? 27,000. Then what else will come? This is called as cash from operating activity before adjusting working capital. Then adjust for working capital changes. What and all will come in this? Investments increased, which means we purchased. Purchase of trade investments. எவ்வளவு? 50? Add பண்ணுமா less பண்ணுமா? Why? Current investments are, it's not a trade investment, it's a temporary investment. It will go to investment activity, not here. Income is taken from investment activity. This will come in investment activity only. Purchase of investment. Interest that we receive, we take it as what? And again, you can see new investments are purchased at the end of the year only. That means we are not buying and selling. It's not a trade investment. It's just a short-term investment. It will be coming under which activity? Investment activity law. Correct. What is the next one? What is it? Increase or decrease? Decrease in inventory. How much? 54,000 we need to add. Then trade payables decrease or increase. One నిమిషం, yeah. Trade receivables, okay. Trade payables 129,600 to 118,800 decrease na we paid. Decrease in trade payables. Decrease in trade payables how much? 10,800. Then that also increase in trade receivables gross 1 lakh 1,53,360. Then no other current assets given. CFO before tax. Minus plus la மாத்திருக்கேன். No, before that, wait. Expense கிடையாது, இன்வெஸ்ட்மெண்ட் தானே இது. What is the mistake I've done so far? Wait, I'll explain that concept. 3,01,536. 54,000 correct. Trade receivable increase எவ்வளவு இருக்கு பாருங்க. Trade receivables, trade payable check பண்ணுங்க. 129,600, 118,800. What is the change? 10,800 correct. Trade receivables பாருங்க. Trade receivables gross to gross 180,360. Then less tax paid. What is the tax paid? So it will give us cash outflow from operating activity. Right. See, current investment is given. What was the opening balance? 54,000. What is the closing balance? 1,08,000. Additions are purchased at the end of the year. Additional investments are purchased at the end of the year. That means we purchased that 54,000 at the end of the year. Otherwise, tell me now, is it a current asset or non-current asset? Is it your trading activity or non-operating activity? Non-operating activity. Why? We are not regularly buying and selling the investments. Only when you're regularly buying and selling investment, it will become which activity? Operating assets, operating activity. It will be adjusted in working capital changes. We had some investments at the beginning of the year. We purchased only once, that too at the end of the year. That's why we got the closing balance. We are not buying and selling regularly. It will not come in which activity? Operating activity. This investment purchased will come in which activity? Investment activity. It is not a trade investment. What do you mean by trade investment? If you are a trader in stock market or any market for that matter, what will you do? You will make at the beginning of their stock, at the end of their purchase பண்ணுவீங்களா? You'll keep on buying and selling. They are trade investments that will be taken in working capital changes. We are not doing any trading now. Opening balance was there, investment purchased at the end of the closing balance, it continues in the next year. So that investment purchase 54,000 will come in which activity? It will come in which activity? Investing activity. See, alternative method of adjusting this is you adjust with retas and take it here. Instead of adjusting as a non-operating item, what you can do? Opening balance of debtors, closing balance of debtors, adjust the provision and change in working capital changes. That way also you can do it. But this is the proper way of answering the question. This is the proper way of answering the question. Normally, in the P&L account, what do we charge? Closing balance provision required minus opening balance. Net amount we charged in P&L account. That's a non-cash item we add back. So if you have completed this, try this. September 2024 question paper. They ask you to prepare a complete cash flow statement. Complete cash flow statement they ask you to prepare. Which means operating activity, investment activity, and which activity? Financing activity they expect you to prepare. Try பண்ணுங்க. That is not an expense. நாமே இந்த ஐட்டம்ல ஆட் பண்றோம். Those are already charged in P&L account. We add back. Will you record purchase of investment as an expense? So it was not charged in P&L. It's a capital expenditure, Mari, or it will be recorded just in investment activity. Same like purchase of land, building, plant, machinery investment. It will be recorded in which activity? Investment activity. The reason for adding all these items are to find out cash from operation from net profit. Net profit is done on accrual basis. It is subject to both operating and non-operating item. We adjust for non-operating items, non-cash items to get which one? Cash from operating item. Provision for tax was charged in P&L account. That's why we add back. Depreciation, there's no cash outflow. We add back. Interest are non-operating item. We adjust it. Provision for doubtful debts is a non-operating, non-cash item. We add back. Take it up. Yeah, please ask. Interest Yes, because it is given in the question. It is given in the question. New debentures have been issued at the end of the year. New investments are purchased at the end of the year, which means if you purchase on the last day, will you get interest or pay interest? No. That is why we calculate on the opening balance. If this information, point number 2 and 3 were missing or are missing, then we would have done on the closing balance itself. So for this September 24 question, will we do under direct method or indirect method? Direct method or indirect method? Direct method. Start. What and all will come in operating activity? Cash sales. What is the cash sales given? 262. Then receipt from customers 134. Then we'll see any other operating receipts. Yes, please. Yes. I hope from the question paper itself some points are missing. I'll share in the group. Dividend 15 lakhs, including dividend distribution tax 2.7 lakhs, also paid on what date? 30th March 2024 கொடுத்திருக்காங்க. Debenture interest 3 lakhs was paid கொடுத்திருக்காங்க. During the year, 8 lakhs of rent was received from property held as which one? Investment is given. 0.5 lakhs interest was earned on advance payment to supplier of goods. Wait. Dividend 15 lakhs paid will come in which activity? Dividend paid will come in which activity? Financing activity. How much paid? 15 lakhs paid will come in financing activity, including this dividend distribution tax only given. Debenture interest paid will come in which activity? Financing activity. Rent received will come in which activity? Investment activity. Rent received will come in investment activity. What about this interest earned on advance money paid to supplier of goods? We paid advance money to the supplier of goods. We got this interest. Charging interest to customers or collecting interest on advance payment, that is part of your operating activity. Is it interest on investment earned or interest on the money that is advanced to the customer, that is suppliers? Paying money to the, if you pay advance money, you earn interest on the operating activity. So that will also be considered. How much will come? Is it sales that will come? Then less cash purchases. How much? 44,000. Then if you prepare creditors account, what is the opening balance? Opening balance of creditors, how much is given? Opening balance 84, closing balance 92. True balance carry down. How much? 92 is given. Then by credit purchases, எவ்வளவு amount credit purchases done? $176. The balancing for will be cash paid to them. 168 paid to them. Then that will come as which one? Payment to suppliers. What is the payment to suppliers? Or creditors? 168. Then what else will come? Suppliers of other consumables and services are paid how much? 19 lakhs in cash கொடுத்திருக்காங்க. Payment to other suppliers of consumables. How much we have paid? 19 lakhs we have paid. Then employees were paid 20 lakhs in cash. Payment to employees is an operating activity. How much they are paid? 20 lakhs they are paid. In this, anything else will come? We are doing under direct method. We are doing under direct method. This dividend paid, debenture interest paid, all those things, rent received, all those things will come in operating activity. Direct method, we take receipts minus what? Payments. All of that. Anything else that will come? Please remember, we are doing under direct method. Direct receipts minus payments. It will give a CFO before tax. What is a CFO before tax? Less tax paid. How much tax paid? 26 lakhs. Outer column net amount will come. 119.5. Next. Next, which activity? Start. Tell me what are the investing activities in this question. Sale of machine. New machinery 20 lakhs were purchased as in part of exchange of old machinery கொடுத்திருக்கான். Exchange பண்ணிருக்கோம். Exchange பண்ணிருக்கோம். Book value the old machinery exchange was how much? 13 lakhs. Begrender agreed to take over the machinery at a higher value of how much? 20 lakhs கொடுத்திருக்காங்க. So, purchase of machinery, did you pay 20 lakhs? No. We exchanged old machinery for how much? All these doesn't matter. I'm buying a new machinery from you for 20 lakhs and you're taking my old machinery for 15 lakhs. Net, how much I have to pay you? 5 lakhs I should pay you. So we are not selling the machine, we are exchanging the machine. So purchase of machine, net payment done. How much? 5 lakhs outflow. No sale of machine will come. Why? Are you getting 15 lakhs? No, we are exchanging for a new machine. Net 5 lakhs will come. Then what else will come? Yes, that additional adjustment. Rent received. Rent received how much? 8 lakhs will come. 8 lakhs will come. Net how much? 3. Positive. Next, which activity? Cash from financing activities. Redemption of preference share capital, including premium. How much we paid? 32 we paid. Then, what is the next one? issue of equity shares 24. Then this dividend paid, interest paid will come. Dividend paid, including dividend distribution tax. Total, how much is paid? 15. Then what is paid? 3. 26 minus. So net increase, cash and cash equivalents. How much? Opening balance of cash and bank, it is given. Cash and cash equivalents at the beginning of the year was how much? 2 lakhs is given. You will get which one? Closing balance of cash and cash equivalents. How much? 98.5. That's it. Then we'll do a question from your ICA material. இல்லை இது முடிச்சுட்டு முடிச்சுக்கலாம். Okay, question number 12 பாருங்க. If you have the material in hand, okay. Otherwise, you can just go through or just download the electronic format and go through. Balance sheet of which company is given? New Light Limited is given as on what date? 31st March 2021 and 2020. Opening balance is given first, then closing balance is given next. Share capital, opening balance 16 lakhs, closing balance 18 lakh 80 is given. Reserves and surplus are given. Material in the download panni, you can just go through this module. Reserves and surplus is given. Long-term borrowings, other current liabilities are given. Provision for tax is given. PPE, non-current investments, cash and cash equivalents given. The practical question number 12 இருக்கும். இருக்கா? Cash flow statement, practical question number 12. Share capital பாருங்க increase ஆயிருக்கு. Preference share capital has reduced. What is the meaning? We issued equity shares but redeemed what? Preference shares. Issued equity shares, redeemed preference shares. General reserve has increased. P&L account will take net profit after appropriation. Debentures are redeemed. Debentures are redeemed. Dividend payable, opening balance is given, closing balance is not there, means dividend has been paid. Current liability, we'll take it in working capital changes. We are given PPE with depreciation. Then the company sold one PPE for how much? 1 lakh. They have given cost and depreciation they have given. The company also decided to write off another item of PPE costing 56,000. Depreciation for 40,000 has been provided. This is what exactly we saw at the starting of the class. This one. I've given the same kind of illustration or kind of a question. It was decided to write off PPE, all those things. Same thing is given here. One is sale of asset, another one is which one? Writing off assets. Depreciation on PPE is given to us. The company sold some investments at a profit of 40,000 is given. Debentures and preference shares are redeemed at the end of the year. At the end of the year means you have to provide full year interest on the opening balance. You have to provide full year interest on the opening balance. We want to value the inventory at cost. Previously the inventory was valued at what? Cost minus 10%. Opening balance is 2,16,000. At the end of the year, there is no problem. Only opening balance, we have a problem. So before we solve, do this. What do you mean by do this? Fixed assets account and which one? Accumulated depreciation account you open. Same like the first question. Try to find out purchase and sale of assets. Try to find out purchase and sale of assets. Try பண்ணுங்க. Don't look at the answer or whatever it is given. Let us try to work out in our own way. Okay. What is the fixed assets PPE opening balance? 32 lakhs. Closing balance 38 lakhs given to us. Accumulated depreciation opening balance 9,20,000 and 11,60,000 is given to us. Then we sold a plant for 1 lakh. Cost is 2 lakhs. We sold a plant for 1 lakh. Accumulated depreciation on the plant is how much? 80,000. Then what will be the loss on sale? We sold the plant for 1 lakh. Accumulated depreciation 80,000. What could have been the loss on sale? There is a doubt. Better you pass a journal entry. Whenever an asset is sold, this is the entry we pass. Fixed assets account data are 1 lakh. Accumulated depreciation account debtor 80,000. Loss on sale balancing for will be how much? 20,000. Depreciation for the current year is given in the question. What is depreciation for the current year given? 3,60,000. This is current year depreciation, 3,60,000. Then we want to write off an asset costing 53,000. What is the asset cost written off? 56,000. 56,000. On the depreciation 40,000 per annum, balancing for you write off in P&L account. So amount written off in P&L account is 16,000. Accumulated depreciation is how much? 40,000. The 40,000 you put on the written off portion. Check whether it tallies. It tallies. The balancing for is purchase of asset. Here no asset is purchased by using shares. This will come in which activity? This will come in which activity? Investment activity. This is same like what we started with the revision. Have you taken up this? Next, the company sold investments at a profit of how much? 40,000 given. What is the investment value? What is the investment value at the beginning of the year? 4 lakhs. What is the closing balance? 3 lakh 20. So, what is the sale of investment? 4 lakh to 3 lakh 20. How much? 80,000 plus profit. We sold for a profit how much? 40,000 means we sold for how much? 1 lakh 20,000. The sale of investment will come in which activity? Investing activity. The profit on sale will be adjusted with CFO. Profit on sale will be adjusted with cash from operating activity. Then debentures and preference share capital were redeemed at a premium of 5%. That premium on redemption will adjust in which activity? Operating activity. Okay. Then interest also we will provide. Look at this point number 6. Previously, it was having a practice to value at cost minus 10%, which means opening stock is valued at cost minus 10%. What is the opening stock value given? 2 lakh 16,000, which is equal to 90%. How 90%? Undervalued by 10%. So how much undervalue? 2 lakh 16,000 into 10 by 90. How much? 24,000 undervalued. What is the impact of undervaluation of opening stock? What is the impact of undervaluation of opening stock? Your net profit would have been understated or overstated. Opening stock is a debit item. Okay, in trading account or whatever, if opening stock is understated, if opening stock is undervalued, if opening stock is undervalued, debit like coming up now, profit gets overstated. Tell me the net profit for the year. P&L account opening and closing balance paranga. They have given in notes to accounts. P&L account 2 lakh 40 to 3 lakh 40. 3 lakh 40,000 minus 2 lakh 40,000 ever 1 lakh add back or less overvaluation of which stock? Opening stock by how much? 24,000. You will get correct net profit. Correct net profit. What is the correct net profit? 76,000 you will get. This is net profit adjustment. Net profit adjustment. Then what will be the impact in current assets? Current assets, opening balance. Opening balance, how much is given as current assets? Current assets include inventory. Current assets include inventory. This 11 lakh 10,000 includes what? Inventory, which is undervalued. So 11 lakh 10,000 plus we have to add 24,000. Why are we adding 24,000? Opening current assets include what? Inventory. That is undervalued. We have to add back. So how much you will get? 11 lakh 34,000. What is the closing balance? There is no change. Closing balance, there is no change. 11 lakh 50,000. This is what you will take it for that working capital changes. repeat. Opening stock value given is 90%. Now it is 90%. Undervalued by what? 10%. So how much undervalued? 24,000 undervalued. So what is the impact in profit? If opening stock is undervalued, your profit is overstated. So we'll reduce that. You get correct net profit. This is what we will take it for that cash from operating activity starting point. Then what will be the current asset or real opening balance? 11 lakh 10,000 given. This includes stock. This includes which one? Stock valued at 90%. How much undervalued? 24,000 you add it. You will get correct value of current assets opening balance. Closing balance or 11 lakh 50,000. This we will take it for working capital changes. This we will take it for which one? Working capital changes. Take it. Shall we? Have we taken up this? Shall we? Shall we go to the main answer? Start. Once again, let us analyze the adjustment. Anything that I missed out? Anything that I missed out? We sold one property, plant, equipment that is adjusted, written off adjusted, depreciation adjusted, sale of investment adjusted. This premium on redemption directly we'll take it to CFO. Then debentures redeemed at the end, of course, interest we'll charge based on that. Inventory also adjusted. Inventory also adjusted. Let us start with cash flow statement. Let us start with which one? Cash flow statement. Start. Net profit after appropriations. This corrected net profit, let us take it and proceed. 76,000. You adjust and work out what is the CFO before working capital changes. Work up to this. Then we'll adjust for current assets and current liability. We'll adjust for which one? This current assets and current liability we'll adjust. Try to work out up to net profit before working capital changes in this question. Shall we? Tell me what are the things. Transfer to general reserve. How much transfer to general reserve? Really? Transfer to general reserve. 12 lakh. Then provision for tax current year. How much? Then depreciation of the current year given in the question itself. 3,60,000. Then loss on sale of machine. How much? 20. Then machinery written off 16,000. Then premium on redemption of preference shares. Look at the preference share opening balance to closing balance. 4 lakh, 2 lakh 80, 1 lakh 20 redeemed into 5%. How much? 6,000. Then premium on redemption of debentures. How much? That also 1 lakh 20,000. 1 lakh 20,000 into 5%. Please remember it is redeemed at the end of the year. So add interest. Any outstanding interest given in the question? Interest on debenture. Any interest on debenture, additional information given? No. How much opening balance? 4 lakhs into எவ்வளவு percentage? 9%. How much? 36,000 you have to pay. Then what is the machinery return of cost? 56,000. Accumulated depreciation already how much has been provided? What is the book value now? What is the loss? 16,000. Otherwise, journal entry A பாருங்க. P&L account data 16,000 and accumulated depreciation of 40,000. The loss to the company is only how much? Is it 56,000 or 16,000 only? 16,000. It is only 16,000. Less profit on sale of investment. How much? 40,000. Then correct. Have we missed out anything? Adjust for working capital changes. Decrease in current assets and increase in current liability. Wait பண்ணுங்க. Other current assets we have changed. Not 11 lakh 10,000. And inventory adjustment kaprama. What is the value? Other current assets. 11 lakh 34,000. Closing balance எவ்வளவு கொடுத்திருக்காங்க? Increase ஆயிருக்கு. So we have to add or reduce. We have to reduce. Other current assets, how much we reduced? 16,000. Then any current liability, cash and cash equivalent is our final answer. Then current liability, increase or decrease in current liability. Dividend payable paid. Opening balance 1 lakh 20, closing balance 0 இருக்கு. That will be taken in which activity? Financing activity. So increase in current liability from 4 lakh 80 to 5 lakh 20 we will add. Increase in current liability, how much? 40,000. Adjust up to this, you get CFO before tax. What is the CFO before tax? Much? 10 lakh 4,000 less tax paid. What is the tax paid? Tax paid given in the question? No. Provision for tax. Opening balance will be taken as what? Paid in the current year. Outer column. Verify with your book answer. Correct or correct? Is it correct? Verify with your book answer. Is it 6,44,000? Then which activity? Cash from which activity? Investment activity. What and all will come in investment activity? Purchase of fixed assets, purchase of plant, property, and equipment. How much we spent? We prepared ledger account and all. How much purchased? This 8,56,000 minus. Then sale of fixed assets. We done for 1 lakh. Then sale of investment, including the profit. We sold for how much? 1,20,000. Then any income from investment? Any income from investment? Any other investment activity? Cash from financing activity. What and all will come in financing activity? What and all will come in financing activity? Debentures redeemed. The 1,20,000 plus 6,000. We redeemed 1,26,000 minus 1,26,000. Then preference share capital redeemed. Same 1,20,000 plus 5% premium. Issue of shares. Look at the equity share capital. Opening balance to closing balance. Increase आएगा reduce आएगा पर. Increase आएगा. Opening balance to closing balance has increased. Opening balance to closing balance. Preference share equity share capital has increased by how much? 4 lakhs. Then dividend paid. The opening balance payable. Why? Because closing balance is missing. How much? 1,20,000. Then interest on debentures. How much paid? 36,000. Interest on debentures 36,000. Then any other thing that will come? So net increase. No. Change in cash and cash equivalents. What is the change in cash and cash equivalents? No change. Zero. Okay. Opening balance of cash and bank. How much is given? Opening balance of cash and bank 10,000. You get which one? Closing balance of cash and which one? Bank 10,000. No change in cash and cash equivalents. See, every attempt they ensure that they ask a question based on which one? Cash flow. You can see May, September, January, it got repeated. Okay, so in the this time I expect a comprehensive problem like this. Last two attempts they were asking only cash from which activity? Operating activity or a basic problem only they were testing. So they'll uh, they'll ask this kind of a question where they give you two balance sheets. Then you're asked to prepare which one? Working notes, especially accumulated depreciation, provision for depreciation, asset written off, the more adjustment which they may ask you which one? Cash flow statement. Regular class notes plus your ICI material plus revision class notes should be thorough, and a minimum 7 marks they ask this. Minimum 7 marks. It may go up to 14 marks also in the exam. Okay, max range 14 marks. Minimum 7 marks you get from this question. So final accounts of companies, they test. Then what is the next one? Buyback we had seen. What is the next one? Redemption. Sorry, this one. Cash flow statement we had seen. Okay. Internal reconstruction also. Internal reconstruction, short one question is there. So from this, the weightage is around 35 to 40 marks. 35 to 40 marks from this area. Okay. Next, we'll move on to which one? Branch accounts. Not today. We'll do tomorrow. We'll do which one? Tomorrow. I request you to revise debtors system. Then which system? Stock and debtors method. Then final accounts method. Final accounts method. Final accounts method. Then in the final accounts method only, your independent branch or foreign branch is going to come. So just go through the notes on data system, stock and data system, final account system. We'll do problem based on that, because based on branch account, again, minimum 7 marks they test. Minimum 7 marks they test in the exam. It can be, suppose if it is a stock and data system question or a foreign branch question, it can be like a 14 marks question kind of a thing. But it will take solid lengthy time. It will take around 5 to 6 hours of time, definitely. Done. So cash flow, please.